Today, we're going to unpack the property market in Greater Perth City and see if the market in Perth is past its prime or if there's price growth ahead. First, we're going to take a broad look at Greater Perth, starting with the supply and demand of housing in the city. We'll then look at price and growth trends and also look at the rental market. Then, we'll unpack this data for each of the city councils across Greater Perth region so that you can see how the market looks in various locations across the city. At the end, we'll look into the future, at future housing supply and demand, so that you can understand what the real estate market in Perth will look like over the next 5 years. Let's start with supply and demand. Here, we can see that supply has been trending lower from a peak in 2020 and is currently at 12-year lows. On the demand side, demand is up from a low point in 2020 and is at 18-year highs. As of today, demand levels are higher than supply levels in Perth as a whole. Looking now at some key supply and demand indicators. Here, we can see that inventory levels or months of stock are also down from a peak in 2020 and are at 18-year lows at less than 1 month of stock at current levels of demand. Another key supply and demand indicator, median days on the market, is also extremely low at only 11 days. That said, the lowest this has been was 9 days back in 2024, and we're starting to see an increasing trend developing here of higher median days on the market. Still, a median days on the market of 11 days is extremely low, and both these metrics are an indication that Greater Perth is extremely undersupplied. Next, looking at the median house price and the annual growth rate of Greater Perth. What's interesting to look at first is the large growth in median house price since the market became very undersupplied in 2020. Perth's annual growth rate returned to positive growth territory on October 2020, and since then, the median house price has increased by $281,000 over this period of 4.5 years. This works out to be an average annual increase of 11%. However, we can see the annual growth rate has peaked recently at almost 24% and is starting to slow down, having recently recorded a growth rate of 21.9%. That said, a growth rate of 21.9% is certainly not slow. It's about 3 times the long-term national growth rate of 7%. And even if this growth rate eventually returns to 0% over the coming months or years, house prices in Perth are still going to be increasing, but at a slower pace. Next, we look at the median house price measured over different intervals of 12 months, 6 months, and 3 months. We do this because in a fast-changing market, the median house price measured over 12 months is going to be different than the median house price measured over 3 months. The house price over 3 months is going to provide an insight based on more recent sales transactions compared to the house price measured over 12 months. The downside of looking at data over a shorter period, like 3 months, is increased volatility in the values. On the other hand, looking at data over a 12-month period provides more stability, but you get more time lag. So there's pros and cons to looking at both. Anyways, here we can see the median house price over a 3-month period is higher than the 12-month period. We can also see the 3-month median price has been going sideways for about 5 months. This is an indicator that the market in Perth is starting to soften. Next, we look at the 12-month median house price at the different price segments of low, median, and upper. This view is useful because breaking things down into price levels, we can see markets within markets. In some locations in Australia, we can see the upper price segments are stagnating, whereas the lower price markets are booming. However, in Perth, we can see the markets in all price segments have recorded significant increases since 2020. Moving on to the rental market in Greater Perth. Here, we can see a big surge in rents since its low point in 2020. In fact, rents have increased by 42.9% over the last 3 years. Looking at historical growth rates in rent, here we can see that the growth rates peaked in January 2024 at 20% per annum. We can also see the growth rate has been slowing since, although slowing doesn't mean slow. Rental growth in Perth recently recorded an annual growth rate of 10%, and for context, Australian inflation at this time is only 2.4%. This is an indicator of the extreme rental housing undersupply in Perth. Next, looking at the average rental yield of Greater Perth. Firstly, Perth currently has the highest rental yield of any capital city in Australia. However, rental yields are down from a peak of 5% in mid-2024 and are currently an average of 4.5%. For comparison, the city with the lowest rental yield is Sydney at 2.7%. Next, we're going to look at all the previous market metrics, but this time looking at a heat map of all the city councils or local government areas across Greater Perth. For this analysis, I've also included some LGAs which are technically not considered part of Greater Perth and are classified as regional markets. I've included these regional markets because they are geographically connected to Greater Perth, and the market performance of these nearby regional markets is very similar. First, we're looking at the median house price of the LGAs across the region. As expected, the LGAs with the highest median house price are close to the beach on the north side of the inner city. The LGA with the highest median house price is Cottesloe City Council at $3.4 million. The most affordable LGAs in Greater Perth are to the east and the south, in LGAs like Armadale, Waroona, and Bunbury. Let's look at the annual growth rates in median house prices. Most of Greater Perth has been growing at very high growth rates over the last year. The LGA with the highest growth rate was Kwinana at 29.5%, which is over 4 times the long-term national average of 7%. That said, you can clearly see there are many LGAs across Greater Perth that have grown anywhere from 20% to 28%. You can also see one LGA with a negative annual growth rate of 14.9%. This is the LGA of Perth, which is in the center of the city. Because this inner city council of Perth is 90% apartments and only 3% houses, the house data would be based on a small sample size. It's not reliable and can be ignored. Next, we look at the growth rates over a 3-month period. As mentioned previously, looking at data over a shorter period provides more recency in the values. Here, we can see that most LGAs across Greater Perth are growing at between 3 and 4% in quarterly growth rates. If we annualize those quarterly growth rates, we get an annual growth rate estimation of between 12% and 16%. And this is lower than what we saw when we looked at the market from an annual growth rate perspective, where there are many LGAs growing at an annual growth rate of over 20%. So based on the market conditions of the last 3 months, the market across Perth appears to be slowing down from its recent peak. Next, we're going to look at supply and demand. We like to look at supply and demand data because this is another way to help understand future price direction. A market that is undersupplied has more upwards pressure on price and is more likely to grow in the future compared to a market that is oversupplied and has downwards pressure on price. First, we'll look at inventory levels or months of stock. Here, we can see that most of Perth has very low inventory levels of around 1 month of stock or less at current demand levels. There are a few pockets that look relatively oversupplied, such as the LGAs of Cottesloe and Mosman Park with 1.3 to 1.4 months of stock. That said, this is only classified as oversupplied in relative terms compared to other LGAs in Perth. There are some locations in Australia with inventory levels of 3 to 4 months of stock, and those locations are definitely oversupplied. But overall, Greater Perth has low inventory levels across most of the city, with some LGAs being more undersupplied than others. Next, we look at a second supply and demand indicator called median days on market. This is mostly a similar view to looking at inventory levels, and while these two supply-demand metrics are not identical, they complement each other. Here, we can see that most of Greater Perth has low median days on the market, very low in fact, with most LGAs having a median of 10 to 12 days on the market. For context, there are some locations in other capital cities in Australia with a median days on the market of 60 days. So in relative terms, the 10 to 12 days in most of Greater Perth indicates the market is very undersupplied. Now, let's look at the rental market, starting with median rents for houses. The LGAs with the highest rents are near the coast on the north side of Perth city centre. The most affordable LGAs for rent are in the northern boundary of Greater Perth in Wanneroo LGA, the LGAs along the eastern boundary of Greater Perth, and to the south up until Busselton and Margaret River LGAs where rents are relatively high. Looking at rental growth across the city, most LGAs recorded annual growth rates of over 10%, although the LGAs with the highest rental growth were the LGAs around this middle ring on the eastern side of the city centre. When it comes to rental yields, Perth has relatively high rental yields across most of the city, but there are some LGAs with above average rental yields of over 5%, such as the LGAs of Swan, Armadale, and further to the south around Harvey and Bunbury. Looking at rental vacancy rates, these numbers will look good or less good depending on your perspective and whether you're a landlord or a renter. The vacancy rate is a percentage of rental properties that are available to rent. A high vacancy rate means there is more rental housing supply, and an oversupply of rental housing will put downwards pressure on rents. Conversely, a low vacancy rate means low rental housing supply, and an undersupply of rental housing will put upwards pressure on rents. The general consensus, although not accurate in all cases, is that a vacancy rate of 3% is considered to be a balanced rental housing market. So below 3%, you're looking at a potentially undersupplied rental housing market, and over 3%, you're looking at a potentially oversupplied rental housing market. Here, we can see that most of Greater Perth is either balanced, somewhat undersupplied, or very undersupplied. Before we wrap up, we're going to check some forward indicators of supply and demand, starting with demand from population growth. Let's start with the headline figures first. For the Greater Perth LGAs that we've included in this analysis, the population forecast over the next 5 years shows a relatively high average annual growth rate of 1.8%. This works out to be an increase of 242,000 new residents over the next 5 years. And to accommodate these new residents with housing without making Perth more undersupplied, We will need to build 93,000 new homes over the next 5 years. By the way, I used Greater Perth's average household size of 2.6 people to derive the number of new housing required. Looking at a breakdown of future population growth by LGA, we can clearly see locations have a higher forecasted growth rate compared to the average of 1.8%. The LGA with the highest forecasted growth rate is Serpentine Jarrahdale at 4.5% annually over the next 5 years, followed by the LGA of Wanneroo on the north coast with a forecasted annual growth rate of 3.0%. Now, let's look at the future supply picture by looking at building approvals data. Here, we can see the history of the building approvals for all the LGAs in our Perth analysis. Firstly, we can see that the current level of building approvals is well below the level from 10 years ago, at around 15,000 new dwellings currently approved. It's worth noting at this point that not all buildings that are approved get completed. In fact, only around 90% of building approvals reach completion. We saw from a previous chart for the population forecast that 93,000 new homes are needed to accommodate the forecasted 242,000 new residents coming into Perth over the next 5 years. If you average out the 93,000 new homes over a 5-year period, that works out to around 18,600 new homes required to be completed each year. The current level of building approvals is below both the 5-year and the 10-year averages, so it doesn't look like the building industry is capable of building enough housing to meet forecasted demand, which means Perth is likely to remain undersupplied with housing in this 5-year view. Okay, last slide. Here, we can see a heat map of the number of new building approvals from the last 2 years. If all those building approvals reach completion, this map shows the number of dwellings coming into the market in the short term. In summary, it is clear that the market in Perth is cooling down from its peak, where many parts of Perth recorded annual growth rates of over 20%. However, a slowdown doesn't mean slow. When we looked at the market conditions over the last 3 months, there are many LGAs in Perth growing at annualized speeds of 8 to 10%. That is still relatively high and faster than many other markets in Australia. As it stands today, many parts of Perth remain undersupplied, and this will sustain upwards pressure on house prices while those undersupply conditions remain. We also saw that many LGAs in Perth have rental yields of over 5%, which are some of the best rental yields of any capital city. Looking forward, future demand from population growth will remain strong, as Greater Perth has a relatively high forecasted population growth rate of 1.8% per year for the next 5 years. We also saw many LGAs around Greater Perth forecasted to grow at 3 to 4% a year over this period. On the supply side, building approvals are at long-term lows and below the level required to accommodate the forecasted 240,000 new residents over the next 5 years. This suggests Perth will remain undersupplied for the foreseeable future. What are your thoughts on the Perth housing market as an owner-occupier, a renter, or an investor? Leave me a comment below. Every week I unpack real estate markets across the country. Next week I'll be unpacking the Greater Melbourne market. So if you like this analysis, make sure you hit the subscribe button.